Welcome back to another Forex Bootcamp training. In today's training, I'm going to share with you a simple way to chart up your charts. And I'm going to also make some predictions. And maybe we'll also address order blocks, fair value gaps, and, you know, entries and exits as well. So let me write that down. Discuss order blocks. Okay. Fair value gaps, entries, exits. Okay, and I got a couple of tools, so I'm going to share with you that can help you plan your exit. So let's go ahead and dive into the content. Before we get started, if you haven't subscribed to the channel, subscribe to the channel, hit the bell button. That way you get notifications of future videos, so on and so forth. So welcome all new subscribers and welcome back to all the past subscribers. So what you see in front of you is a chart, BTC USD, Bitcoin against the US dollar, right? So this is a live chart. The market's moving right now as we speak. Because Bitcoin, you can trade it 24 hours a day, 7 days a week. The other markets are closed, being that it's Saturday, but they normally open from Sunday through Friday. So we're going to look at some charts, other pairs, but I'm going to break down this one and share with you exactly how I go about what my approach is, and hopefully it can help you with your approach. So grab your paper, grab your pen, take some screenshots, whatnot. That way you can actually incorporate some of the things I share with you on my training. Okay. Now, I've always said that learning how to trade is a big puzzle. You just got to find the pieces. Okay. Once you start putting the pieces in place to fill your puzzle, that's when you become a profitable trader. And that's when you'll be able to extract as much income as you want from the markets and start living the lifestyle and dream you've always wanted to live. Okay. This is a great way to earn an additional income, very part-time. Um, if you have, if you got a full-time job, you can trade the market to earn extra income. Instead of asking your boss for a raise, you can give yourself a raise. Okay. Or if you want to become a full-time trader, of course, you have to treat it like a job or a business. Don't treat it like a hobby. You have to study, you have to practice, you have to create a trading plan because you can't really win without one. You have to implement your plan to be consistent. You have to shape your mind to be a professional. So psychology is really, really important. You want to make sure you jump into the markets with a sound strategy. So let me share with you my strategy, and hopefully you can adopt or add or take away what you want as far as, taking a piece out of my training and put it into your puzzle. All right, so let's dive into the content. All right, so we're in Bitcoin right now, and I'm looking at the chart. I'm on the daily chart right now. Okay, so in the daily chart, I want to, first off, let me get my biases in place. I want to see if the trend is uptrend or downtrend. So that's the very first thing you should always ask yourself is whether we are in an uptrend or whether we are in a downtrend. Okay, so looking at the chart, we see Bitcoin made some highs over here. Okay, and we noticed that it was trading sideways at one point and then made a spike up. Okay, and during this spike, it went sideways again, and then it started trending lower. But did it ever break structure? Well, let's take a look. So when analyzing the chart, you want to make sure you find your lows and you find your highs. So according to TradingView, which is a platform I use to work up my charts, it shows me the lows and it shows me the highs. So the lowest point where the market went is down here. So I'm gonna make that, I'm gonna mark that. down here, and then the highest point was up here. So we're going to change the color. That's the very first thing you do. You mark your highs, you mark your lows. Okay. Now, I like to use this tool, okay, called the path tool, which can be located in the left panel. Go to the path, make it your start, so it can make it one of your favorites. Okay. Now in the path tool, I like to start from the bottom and, you know, try to find my highs and my lows, my higher highs, my lower highs, and vice versa. So when you start to do stuff like this, you'll notice pattern. Okay. And you'll notice whether the market trending higher, okay, over here, trending. So looking for higher highs. So this is where the market was much going sideways. So no activity really was happening in this area. Hopefully you didn't get trapped in this whole area right here. The market was actually trending sideways. So I'd like to mark that up as well. Okay, so this whole area was a sideways consolidated area. It really didn't make a higher high, didn't break any top of the box at all, or lower low. Okay. So that was all consolidation. So if you're a breakout trader, you're waiting for a candle to break out of the box, and this would be the part where the point where you would actually look to get in from bottoms. Okay. So that means the market was trending higher here. Then it broke down, higher high, lower high, higher high. And all of a sudden it came down here and touched these levels here. So this is probably one where I get touched only once. I'll tap it down. So pretty much what I'm doing is just training my eye to see if I can find a consistent pattern of what the market's doing. So we know that if the market breaks these lows right here, okay, there's a change in structure. So I don't know if you guys see that. The change in structure when the market broke these lows right there. Okay. This tool tell me that the market came down to this level here on the left side. The market actually broke structure. And so therefore, market breaks structure, you're looking for a reversal, right? Reversal the pattern going down. Let's see if it maintained that forward. Start from here, go back up, then retrace back into this area, make another lower low. Okay, typically you want the market to come back down here to make a lower low, but it didn't. So it came back up and broke this level here. Okay, where market structure shift, as you can see. Okay, because if the market was going to actually make a low low, it wouldn't have broke this area. It would have retraced here, and then did one of these numbers to make a lower low. It didn't do that. Okay, so it actually broke structure here. So you could, mark this up. Break a structure and change your structure. You can give structure, change of character, label it as such. And when this happens, typically you gotta find, okay, what caused this bullish movement right here, and then you mark that. Try to find your order block. So what caused this movement here was this movement over here. Okay. So therefore, your order block is this black candle right here. Stretch this out. Okay. But typically, the market needs to come back and fill these gaps. Share with you what gaps are. There is a fair value gap between this candle and this candle. The market needs to come back here. Here. Got to come back and fill these gaps. Right. Now, if it breaks through these two gaps, it's looking to make a lower low. Got to pay attention to what's going on. Okay. So that is a prediction for Bitcoins to come back and revisit these areas before you actually take a buy. Hey, you don't want to buy high, buy low, sell high. It's a rule that every trader uses when it comes to entering the market. All right. So now that we have our bias, right, we know that the market's trending higher. It broke structure, right? Trending higher. So all we got to do is wait for it to come back down. Either the order block or the fair value gap that go higher. And then we're going to go down to lower time frames. See if everything that I marked out is consistent to my bias, because my bias is the market's trending higher. So I'm looking for buys, I'm looking for bullish movement inside the market. Okay? And I'm looking at the full hour to see if I'm consistent with the daily. Okay? So if I erase everything, I'm going to mark it up again. This time, start over here. Bring a high. We came down here to this low. And sideways. You can see here. Got one sideways and it came down. Low. Came down and made a lower low. This low is lower than this low. It came down and made a lower low. This area is where marked the lowest point. Right? It's lower than this area here. This is a lower low. And it came up. Sideways. It broke out of the sideways movement. Up, down. See, so top of this area is that made it bigger. This tool, top of the candle, stretch it all the way out here. You see if it's higher than the candle over here. It is. So it broke structure, right? It made a higher high over here. So therefore, once again, bias is saying of the daily, the market wants to trend higher. Okay. And it's impressive that the market's already at this level right now. It's like 4,300 and change. All right. So what caused all of this? Okay. So we want to come down and see, you know, you want to find your order block and you want to find your fair value gaps. Same thing as the daily. Okay. Typically, to find an order block, you want to look for some huge candles. And the candles before will give you, okay, where the movement happened. Where did the market enter to buy to create these huge momentum candles? Okay. So basically, you notice that the market right here trended higher. So the order block down here, it's usually the first white candle or red candle, whatever candle you have on your chart before the bullish movement. Okay. And then you have to say to yourself, okay, now that I found the black candle before the bullish movement, okay, where is my fair value gap? Where's the gap within all these candles that I can mark? Okay. Well, there's a couple of gaps because remember I mentioned that the if you already have this on your chart, the highs and the lows, and it's really easy to find. You just left right click on your chart and you go to your settings, and there's a section here help you mark out your highs and lows. Let me see if I can find it. Okay, previous day close. Here it is, high and low. So you would put that on your chart, the high and lows. Make sure this is filled in. Okay, because on the 4 hour it says my high is up here, my low is down here. Okay, we have actually a few order blocks here, right? We have this movement here and this movement here. So there's two order blocks. So we're going to mark this up. And then within these order blocks, try to find your gaps. Now, you guys see a gap here between this candle and the third candle. So one, two, three. The middle candle, the second candle. The first and the third candle didn't touch with a wick. The wick is on top of the candle. The wick is on the bottom of the candle. Did not touch, so that's a gap right there. So I'm anticipating this area here, my gap. And then I have another gap over here that I'm going to mark up. So let's see, one, two, three candles. They touch. So I can't really call this a gap. But there's one here, and there's one here. Yep. Is it one, two, three? Huge bullish momentum candle. But yet this wick and the candle before the big bullish candle, those two wicks did not touch. So therefore, it's created a gap. That's why I'm marking it up. The fair value gap. And that's pretty much fair value gap with AG. Okay. So I'm looking for the market to come down to either touch one of these areas. What I'm looking for, when it does touch these areas, I'm looking for a bullish engulfing candle. I'm looking for any reversal candle that's going to tell me that trend is going to continue going higher. Okay. Again, the Candlestick Bible book explains all of that. If you have to read that, watch it, or have it read to you. I have a hard copy of it. I can send that out to you, absolutely no charge. Just email me, or you go to my YouTube channel and search for the video. It's an audiobook. And I have a young lady who actually reads the entire book to you. You could listen to that while you're driving, going to work, um, doing chores, going to the grocery store, whatever the case is, going for a run, going for a walk, put in your earbuds and listen to that book because you're going to need that. That's your blueprint to understanding what these candles could tell you. Okay. All right. So this is my 4 hour bias. So basically, okay, if I was to enter the market or into the market, once the candle bounces off one of these levels, preferably if you're patient enough, which is important. Okay. The key is to be patient. We'd want the market to come all the way down here, come back up to this area where you take profit. You set your stop loss right below your entry. Okay, this would be like a 1 to 11, 1 to 11 ratio. Okay, because you want to ride the market all the way back up here. Okay, and then when it gets to your break-even point, you move your stop loss break even, and then it's a risk-free trade. Okay, now that's provided that the market comes down and hits this order block. It could come down and hit the fair value gap. Okay, then you would have to adjust your TP because you want your TP to hit this area up here. Okay, because typically the market has to make a higher high, so you want to make it so that this put is triggered for your TP. Okay. Okay, there's another area that the market, well, 2 more areas. You can place an order here if the market comes to this area. Okay, and that's for a 1.825 ratio. Okay, or the market would come here, and this would be about a 1 to 6 point 5.83 right here. Okay, now those are your ratios. All right, but there is a tool that you can use called the Fibonacci retracement tool, which you can find on the left panel. Fibonacci retracement, you click on that. You go to the low and stretch it all the way out to the high. And you pay attention to a couple levels when it's making start good. And you can copy my settings if you want. Okay, these are the settings. Okay. Now, in order to get to the settings part, there's a little, this thing pops up. When you click on it, this little thing pops up. You get this gear right there. It brings up all your settings. You can copy my settings if you want. Pause the video, copy my settings. So what I'm looking for in this Fibonacci retracement tool, I'm looking for the market to come back to the fib numbers that I have on the right side of the tool. Typically, the market will retrace to 0.5, which is 50%, because this whole area is called premium. You don't want to sell in premium. You want to, actually, you don't want to buy in premium. Okay. You want to buy in discount. Okay. So below the 50% level, right? All this areas here is discounted level, and you want to buy in discount and then ride the trend upward to make a profit. All right, so 0.618 and then 0.75. These are the key areas, so you want to pay close attention to these zones. Excuse me. Or if it comes all the way down here, where the order block is, and there's another fair value gap right here, I'm going to pay attention to that as well. Okay. So you set a trap. This is a trap. You just wait for the market to land in one of your traps. Okay. Instead of entering the market and trying to make money without a strategy, this is part of my trading plan. This is what I do. This is why I've actually been successful in a lot of my trades because I set these traps. Okay. Now, is it 100% foolproof? No, because the market could blow past my traps and trend lower. Okay. And then I got to recalibrate. All right. So that's a 4 hour. Okay. You go down to the 1 hour, do the same exact thing until everything is in alignment with your bias. Okay. So nothing really changes here other than, you know, creating new fair value gaps and finding a new order. So you already know that your bias is an uptrend. The browser erase everything. Again, I'm going to mark it up with my lows. This is the low. It's the low. That's the high. Start marking up your mark the same way you marked it up all hour daily. See, the reason why I did it on the daily is to get a total understanding of the market's going on in the 4 hour, and then depending on where you want to enter the trade, right? If you want to enter the trade in the 4 hour, you go back to rewind the video and copy and paste what I put on the 4 hour and wait for the market to come down to those levels. But each candle takes 4 hours to get to that level. If you want to enter the market on the 1 hour, okay, you got to find new areas, right? You got to find new areas. So down here is your order block, right? You can see how the market came back down and touched the order block, bounced off the order block, it trend higher. Then the market created another order block right here. Remember, the order blocks are usually before the huge moves upward, these huge candles. Okay. And then within this order block, you see a gap, gaps. You have to wait for the market to come back down and fill these gaps and or bounce off your order block. Another one here. And if I was to open this one up, I'll make it bigger, bring something here. This was a small little order block right here, right? But look right here, gap right here. This wick and that wick didn't touch. And there is a gap right here. This wick didn't touch. So that middle candle is your bullish candle. It is considered F fair value gap. FVG is also considered FVG as well. Okay, and all you do is just stretch it out. This is really considered your supply and demand strategy. It's all down here. Like you're waiting for them to come down to these zones and for the candle to give you a buy signal. Once again, candle gives you a buy signal, you're going to be all in the trade. Again, here's another order block right here. have a gap. Remember, big bullish candle right here. That would make this just, there's really not a gap there on the surface. This candle, these candles, that's your gap. Feel the market came all the way back down to fill the gap here. Okay. Market came back, touched the gap, filled it there, then came back and refilled it again. Picked up all the orders that are left behind, trended higher. Okay. Retrace, trend higher, trace. So you got to ask yourself, okay, what caused this movement here? Well, it's this right here. Okay, what you're waiting for is the market to come back and fill the gap, hopefully bounce off and go higher. But if it doesn't, because you see the doji candle right there with a hammer, which means the market probably will trend lower to try to hit some of these gaps down here. I'll look at something like this. Just to hit the gaps and trend higher. That could be one prediction. Or hit this gap, this gap, this gap, this gap, this gap. You just gotta pretty much watch the market to see which one of these gaps is gonna fill. Just so know when it's gonna fill those gaps. Okay. But when it does, you're ready. Okay. You're ready to enter the market. Okay. That way you can actually profit from the market going up. Right. So that's a 1 hour. Go down to the 15-minute. And pretty much nothing really changes because each zone, whether it's the daily, the 4 hour, the 1 hour, the 30, 15-minute, it all has to coincide with each other and it has to give you the bullish momentum that you're looking for. Now, it could be retracing when you have your pullbacks, okay? And that's where you want to really enter the market is during the pullbacks. When the market actually get into these areas like the fair value gap, that's when you enter. So you would enter here, you would enter here, you would enter here, you would enter here, okay? You enter on the pullbacks, okay? And then exit higher, okay? And I did mention that I'll show you a tool that can help you with your exits, right? Now you enter the market and you see this right here, right? You see this right here. You're going to take your Fibonacci tool. It's going to show you that this is a Fibonacci tool. You stretch it to the high. And what did it do? It came down to the 0.5% level and then bounced off that area and made a higher high, right? Now, delete this tool and take the trend-based fib extension and you do the same thing, the low to the high to the low. Now this tool, change the color. Will tell you where to exit the market. So you exit the market at 1. Okay. So here are my settings. Here's the 1. And that's where you would exit the market. Okay. Pause the video if you need to. These are my settings. And you have 1, 2, 3 boxes checked. So with this tool, you would exit the market right here. So if you had gotten in the market off of this area here, which is 0.50, you would exit the market right here when it hit the 1. And look at that, you would have been in profit. Okay. for that ratio, you entered here. So it's interesting. Based on the 15-minute. So area ratio 1 to 10. Okay, 1 to 10 right here. Profited really nicely right there. Okay, so those are the tools that I use to help me with the market. So this is my bias. It's just a prediction. Guarantees. Market doesn't owe me anything. Market doesn't owe you anything. All we could do is mark it up and hope strongly, right? Hope for the market to come and come into our traps so we can profit from the market when it goes back up, right? So this is what I do. Now this is just Bitcoin. So if you go down to the 1 minute, let's see, 5 minute, 3 minute, 2 minute, 1 minute. Okay, I don't take trades in a 1 minute, as I do. But as you can see, it's bouncing off these areas. Okay, but this is where the market's most volatile. So, better stay away from the 1 minute because stuff happens. The candles change rapidly. Okay, so you want to really enter the market on the 15-minute and or the 5 minute. All right, so that was me charting up my chart based on the daily 4 hour, 1 hour, and the 15 minute. Okay, and then the 15 minute, you just wait for the market to come to you, pretty much. Wait for the market to come to you. Remember, you got your low, you got your high. You can take your fib tool out now if you want. Go to the bottom, point it all the way up to the top. Then, if you want, you could mark up another way of looking at it. Mark up your 50. It's like setting remote. Place markers and say, okay, if the market comes to these areas, let me get into the market for a buy. Okay. So those are your zones, right? Area zones within the 15 minute and about your retracement. Okay. And then, oops, and then these zones, okay, in these zones, you look for a couple of things. We marked it up. We look for the order box. We look for the fair value gaps. Because if we could find a fair value gap within our key areas, then great things can happen. So let's open this up a little bit. Okay. So we have this order block right here, like candle before the bullish one. There's that order block right there. So I stretch it out to fill the entire candle. So that's the area of interest market may come down to. Okay. But there was a gap right there, which it did fill, right? Okay. Fill that gap perfectly. Fill this gap. but we wanted to stretch down a little bit, down a little further to hit our areas that we had marked on the Fibonacci. So this gray area is 0.5. This one's 0.68. This one's 0.75. And so is there a gap in this area? Let's take a look. This wick, this candle's wick, this candle's wick did not touch. There's a gap right there. Small one, but there is one. So you stretch that gap out. And it's right before the 0.68. Right? Then we come down here and ask ourselves the same question. Is there a gap? Well, there was one, but it filled with these candles. Is there a gap over here? Yeah, we already marked off this gap, so I'm just waiting for it to come down to touch that gap. Okay. Because based on our fit tool, haven't come down to discount levels yet in order for us to take a buy. So I went into the market until it came down to these areas. And when you see a bullish engulfing candle bounce off these areas, that's when you place an order for a buy. Okay, so hopefully that makes sense. We run the video. If you have questions, replay it, play it more than once so you get that way you get a true understanding of what I've done here. There you go. There, bounce off this area. See, the market has gaps on the top end of the market and on the bottom end. It depends on the type of trader you are. Or you're a seller, so you ride this all the way down. Are you a buyer? So then you would ride it when it gets to your discount areas. Okay. Because some of you guys might say, oh, I see a couple of gaps up here. The market needs to fill before you go to the gaps below. Okay. So for example, here's a gap. And better. Using train your eye to see these gaps. Okay. There's an order block. Candle drop. Candle before the drop. White candle before the drop. It's your order block. White candle before the drop. Order block. And again, the candle drop. See, and it came back, touched the order block right here. Okay. So that's it. That's what I wanted to share with you guys. You guys are awesome. Thank you so much for spending some time with me today. I'll be back on here on Saturday. Again, if you have any questions, put it in the comments area. Subscribe and hit the bell button for future videos. And as I upload them, the bell will send you a notification that hey, there's a video that you need to pay attention to. But other than that, that's my session for today. Thank you so much again for watching. And you guys have a successful trading week. Take care. Bye bye now.